Hey guys, welcome back to the channel. In today's video, we're going to be talking about co-signing for a loan. What are some of the pros and cons, and what can actually happen when you do co-sign for a loan, and what does it mean? Now, before we get into the video, go ahead and click on the subscribe link, turn on notifications so you can stay up to date on all of the information that we provide on this channel. Now, co-signing for a loan essentially means that you're taking the liability out of, or sharing the liability with another person. Now, there are a lot of pros and cons to this that we're going to go through. Number one, for the pro, helping a borrower get a loan that they need. Now, there might come a time where an individual doesn't qualify credit score wise. Maybe they had some rough repayment history. Maybe they don't have any credit at all, such as your children. Helping them or co-signing for those loans really takes your credit score into an account and your ability to repay, which can have a factor with debt to income ratios and things of that nature. It will also assist the borrower in building up their credit score. So again, in the case of having children that do not have credit established, or even trying to reestablish the credit, they are essentially riding on your credit to get this loan. Also, with larger loans, it could be a much lower rate. Now, this is very beneficial when it comes to unsecured loans. When it comes to auto loans, rates can vary from, let's say, 3% to 20%, 30%, even seeing them somewhat higher is, again, depending on your credit, where if you have someone that has zero credit, they might get a 10% loan. If they have a cosigner that has well-established credit, they might get a 3% loan, which of course can have a absolute incredible effect on that monthly liability. In addition, guys, co-signing, again, can really help build a relationship and a credit history, but there are a lot of cons. And again, really, when you think of a cosigner, you are carrying or taking on the liability of this loan. Now, you might be co-signing for a friend, you might be co-signing for a lot of times we see a boyfriend, a girlfriend, whatever it may be, guys. Again, you are taking on the responsibility of this, which is where the very small list of pros has a big list of cons. Now, the big one, of course, number one, you could end up repaying the loan yourself. Now, if the primary borrower cannot make the payments or they refuse to make the payments, you are going to be held liable, meaning that you could be getting collection calls, you could be getting late notifications, which ultimately, if they are not paying the loan, it is going to devastate your credit score. Now, if they miss a payment, again, let's say you have absolutely perfect credit, you've had years of perfect credit, you have had no issues with your score, you've never had any late pays, all of a sudden you co-sign for a son or a daughter, all of a sudden they're paying 30 days late, 60 days late, you're getting calls. Now it has a big impact on your credit. Another thing, guys, is removing yourself is essentially very hard to do. Banks, credit unions, financial institutions do not want to release the liability of a cosigner because they know they have you in the agreement and they have you kind of on the hook for the payment. Again, if the primary person is not making the payments, they're going to look to you to make the payments, again, affecting your credit. They're going to come after you for the money, which, like I was saying, the list of cons to a cosigner is very, very long, guys. Another one is a lender can sue you. So if there is a lawsuit, if something happens where there is no payment, you can be dragged into a ugly lawsuit, essentially with the lender trying to get money out of a borrower that does not want to pay. And all of a sudden you find the cosigner in that exact same relationship. In addition to that relationship piece, it could really affect your relationship depending on who you co-sign. Could put a strain on a family, could put a strain on if you signed, for a friend. In addition to not only the relationship, is if you're going to look for a vehicle yourself, again, it can have an impact on your score. It can also have a very impact on your debt to income ratios. If you're co-signing for a car and let's say the liability of that car is $500 a month, all of a sudden in a couple months you need a car. Is your income going to support that additional $500 payment that you are responsible for? Now, That does not mean that you're making that car payment. That just means ultimately you're responsible for. Lenders have to take that into account when they make lending decisions, that now it doesn't look like you have one single auto loan, but now it looks like you do have two because you are co-signing with another individual. So again, guys, you really have to weigh a lot of the pros and cons when it comes to a co-signer, and really put yourself into a state of mind that says, do I have the ability, do I have the financial ability to make this payment if the primary person is not responsible for it? Again, in the case of a family member, if they say, I promise I will pay, and then all of a sudden they're not paying, it could really damage the relationship, resulting in you ultimately be responsible for a loan. In the case of an auto loan, if you're making the payment, someone else has the car, someone else has insurance on the car, you're essentially paying for nothing that you have, with a monthly liability, just because you don't want to damage your credit, which again can put you in a very bad situation. If one, you need to get an additional loan, or two, trying to get that collateral back might even go as far as to getting lawyers involved, might as be, go as far as getting the financial institution involved. There are a lot of things that can happen. So really take everything with a lot of thought. Do your research, guys, before you co-sign on any loan. Again, primary thing to think about, guys, is can you make this loan payment on your own? If the primary person quits paying the loan, what are the chances that you can make sure that you pay this on your own? Other big thing to remember, guys, is monitor the loan. It might not sound like a big thing, but if a person is 30 days late, chances are you might not get a notification right off the bat. If they get 60 days late, possibly could get notified. By the time they're 90 days late, guys, and you get some notification, or if you finally get your first notification at 90 days late, it could already have an incredibly bad impact on your score, which is the reason why you want to stay in the loop with the loan. Ultimately, guys, again, it is your decision if you do want to co-sign, but tips from me: one, make sure you know exactly who you're co-signing for. Should be a pretty short list with people that you're willing to co-sign, because again, it can definitely affect your credit. Two, make sure that you're tracking that every single payment is made, and make sure every single payment is made on time. When it has the potential impact to affect your credit score, that you've worked an incredible amount of time to develop, to build, making sure, again, everything is cleaned up, everything is accurate. To have someone actually come in and damage your credit can be very detrimental, again, to the relationship. Also, it makes you do look riskier for other loans. So when you do additional lending, it could also, again, take into account that you already have a payment from other places. So guys, that'll do it for today's video. Again, put a lot of thought and effort into co-signing, or long before you co-sign for a loan. Even knowing which parent would co-sign, whether it's, you or your spouse are going to be the co-signer if you do have children, things of that nature. And also make sure, guys, that when you're starting off young, 18 years old, guys, get a credit card. I know it sounds kind of crazy, but the sooner that you start establishing credit for the youth, the better they can have, and the better chances that they can have to build that credit. So again, guys, that'll do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.